What's up, YouTube family? It's your boy Mpumi and Co with Funds and Galore, where investing meets more. So guys, today we're gonna do a market breakdown for S&P 500, Nasdaq, and also gold. Not breakdown, I meant like where I'm looking. I'm gonna give you guys entry levels where I'm actually looking to enter the market. So I'll just give you guys that in no time. Let me just hit you up with a disclaimer. Guys, always keep in mind that I am not a financial advisor. The content of this video is for educational, informational purposes only. Any opinions, analysis, or recommendations expressed are solely my own and should not be taken as financial advice. Always do your own research and consult with a licensed financial professional before making any investment decisions. So I had to hit you guys with that disclaimer. So right now I'm just gonna give you guys where I intend on entering. If you wanna replicate everything that I do, guys, it'll solely be on your own risk and everything like that. But one thing that I always emphasize is proper risk management, guys. Always use a proper lot size. Don't intend on using big lot sizes to capitalize and make a lot of money. It's not worth it, guys. Use small lot sizes, capitalize on the market in terms of what the market is providing, and just stick to your lane, man. Always stick to your lane. Don't try to replicate anybody. Don't try and do anything that other people are doing. If a person is trading 0.10 lot size, don't do that, man. If you know that you don't have an account size that is suited for that. Like I always said, check my back testing. Like I always said, survival is the name of the game. Being able to survive long term, that's how you actually make money. So without further waste of time, let's just dive straight into it. So guys, my first analysis, it will be S&P 500, right? So as you can see, we have our green line here. This green, trends that replicates our daily trend. Like I said in my market breakdown for S&P 500, that we are looking for entries until literally until the upside, so for in terms of how long it's gonna take, I don't have an answer to that. It can take as long as it can, guys. And like I said, we love it when the market breaks and sells because it creates high probability setups. As we can see, we have a 4-hour trend right here, which is highlighted in purple, this trend right here. So if we look deep, what can we see? That the market is eventually playing on our support region, right? The market is playing on our support. So now we're looking to capitalize on movement. As we can see, on the upward movements, as we can see quickly, we have pushes from the support to the resistance, and the market is finally back at the support. So we're looking for confirmations first before entering, guys. So as my thingy indicates, my long position indicates here, that we're looking for entries, waiting for the market to break a back in here to confirm the stability of this trend, right? We need to confirm before entering. So what we're looking for is that we're looking for prices to push back in here, break, give us those retests. Once we have that retest on the 30 minutes, we need a bearish candlestick, bullish, then we enter, guys. Literally, that's what I'm going to do when the market breaks back in there. That's literally what I'm going to do. So we're gonna be targeting a 98%, 0.98, which is not that bad, and we're gonna be risking 0. Let's keep it at 0.35%, right? This is what exactly we're gonna be doing. So the market will break in here, give us those retests, then we're gonna go for our entries to the upside. Then when the market breaks back here, you can look for those sculpting, which I'm not gonna take because everything is very tight at that angle. So there can also be entries, depending if you guys want to take these small little trades, which I'm not going to take because literally the take profit for this is basically what a stop loss, so I'm not gonna do that. So that's basically it for S&P 500. let me just remove this. So that's basically it. I'll just give you guys updates later on S&P 500. We also, before we go into gold, I want us to go into Nasdaq quickly. So Nasdaq, we're looking for entries exactly where the market is right now. Why isn't it showing my thingy? Didn't I save it? But anyways, yes, we're looking for entries right about here where the market is playing. So now the market is pushing here. We could have entered here, but I did not want to enter there, guys, because I wanted to wait for confirmation. All right. We're looking for entries, but it's fine. Tomorrow it's 10. We can't enter now. It's late at night. We're not gonna enter. If you're in South Africa, man, it's already too late to enter now. But we would have entered it right about here, right? Until this level, yeah. So basically, what we are waiting for Nasdaq is that we are hoping that, or if we're waiting for prices to push back so that we can catch entries at a much reasonable price, because we want to catch it at a much reasonable price. We'll target a whole 2%. I don't go above 2%, so 2% is basically my overall target for the market. So we're waiting for the market to push back. Hopefully it will push back. If it doesn't, it doesn't. It's fine. As you can, if you guys been following my back testing, you know sometimes the market does leave us. So we're waiting for those breaks. So basically, this is how we intend on entering it, right? So you're gonna wait for those retest, break, retest there. So hopefully the retest will push back here, and once it does, then we'll get those entries right for our 2%. This will give us a crazy return on investment, guys. Whether you're using a micro or whatever, like I always say, make sure that you're trading according, respecting the amount that you invested with. So that's basically what we're looking for. So I'll just place my alert back here. We'll insert an alert here so that the market can indicate to us that we've reached this level right here. If we zoom out, we can see that the market is playing on our trend right here. It's playing. Let's just zoom out again. Like S&P 500 is playing on the 4-hour trend. The market buys here. The market buys here, it sells here, then we bought again, then we hit that. Wait, that was bad. We bought here, came back to retest, hit our resistance. It's just following setup, came back. Now we're looking for pushes all the way to the upside. So we're gonna capitalize it break by break, like little by little. We're not gonna intend on taking the whole move because Nasdaq is very volatile. It's important to understand that whatever this high probability setups, all of them, including gold, they're very volatile. So it's essential to just enter and exit where the market is giving us the most probabilities, you know, and we need to exit quick. So this is where we'll exit. So it's possible that the market can also break back here before making those pushes to the upside. So like I said, we're waiting for a break and a retest. One more time. Let me just demonstrate it one more time. So we're waiting for market to break, give us those retests, maybe giving us that W formation, because a W is a reversal pattern, before making those pushes to the upside. Yeah, so basically that's that. Okay, my network has been tripping a bit, so let me just, yeah, we're waiting for that so that we can capitalize on those movements until our key level, which is highlighted in green. So we'll enter here, like I said, until there, and then obviously we're gonna have a smaller stop. So we'll wait for something like this so that we can capitalize on a whole 2%. move. So basically we are risking far less than what we are intending to make. Therefore, this is a high probability setup, and also risk management is precise, it's on point. So let's just save this so that that alert can also save. So everything is saved. Let's go into gold. Currency war, gold. Basically the same thing with gold. So we are waiting for pushes. The market has hit our support, but it hasn't. We will need it to retest. Yeah, we need gold to retest first before going for those pushes to the upside. Guys, we want to only trade from 9 a.m. until 10 p.m. guys. Literally right now we're not going to be looking for entries. It's already too late or anything like that. So we're basically waiting for the market to do that before we capitalize on these moves. Like I always say, if it leaves us, guys, it literally leaves us, but it's important to wait for the retest before entry, guys. So here we stand to make, let's just see how much we stand to make with this trade. So gold, we've been having a succession of wins, right? We've been having a succession of wins. So you're gonna be targeting and also a 93. A 93. Or 98, depending on how the market closes. So we need a bearish candlestick to close at this key level or at this zone. The market can also drop back at the zone before pushing to the upside. So that's why we're having our stop loss just there, just slightly below our zone. So we want to have a bearish candlestick and a bullish for confirmation, then we enter. Literally that's just that. So basically that's all the setups for today. Wait for the retest tomorrow 9 a.m. If everything is according to what I'm saying, you can enter those positions, guys. But literally follow everything that I said and everything should be fine. And always use risk management. We can literally win or we can lose. It's fine. But as long as you're using risk management, you should be fine. And like I said, these are high probability setups, so use risk management also. Don't be ignorant. Don't do anything that is unjust, guys. Just do everything that I said you should do. If you have any inquiries, please let me know in the comment section so that I can verify with you guys. Just let me know in the comment section, guys. So basically that is it. I was not intending on recording today, but yeah, we are here and everything is done. So I'll see you guys next time. Peace out.